Hi folks, Lee Gettess here with the Market Sense for the week of February 3rd, 2015. We're going to look at charts from the Trade Navigator software, and I wonder just how much of my life has been spent staring at these charts. This is a weekly bond chart, and you can see they've kind of turned down this week. Boy, they've run up so hard, I don't know that you can make too much of this. We were really expecting them to go up to about 115, 152.16, right up in that area. Clearly, they've turned down without going any higher at all. The best support was probably here in the 149.28 area. They haven't held that clearly, or at least they're below it as of Tuesday. At the end of the week, they could be back up here and will just look like it held that support. But they could go down here to the 148 area very easily, and that wouldn't, that's a big move down, but it wouldn't really break anything. And that's kind of the problem we have here. Boy, they go all the way down to the mid-Keltner channel, the 144 area. Heck, the previous swing lows below 142. They got to break a long ways just to do any technical damage at all, just because the run-up has been so strong, and especially this last part. Now, they're going to turn down at some point, and this could very well be them turning down right now. I just wouldn't want to be the one to make an early call on this and watch them go to 200 or something. I don't expect that, but you see signs that they could be rolling over here. Absolutely. I just don't want to be too quick to call an end to the bull market just yet. Stocks, well, boy. Stocks are having an interesting period here. Last week they looked kind of ugly, and we thought they would probably be going down to the 1963 area, this projected low, which would have put them right between these two previous swing lows, just above the low from December. That would have made a lot of sense. They only got down to the 1974 area and turned back up. That being the case, you'd expect resistance in the 2020 area, but they're clearly closing above that as of Tuesday. And you have to understand, we're looking at weekly charts here. This bar, this last bar, that's 2 days. It only took them 2 days to do as much range as they've been doing recently, and a lot more than they were doing at the end of last year. So a lot of volatility here, and that doesn't even show you all of the 20-point intraday swings back and forth that they're doing. This looks like they should be going up to the 2055-60 area, and there's a ton of resistance in here. This previous little spike, and they're kind of all in the same area here, but this little spike here is like 62.5. So between 2055 and 2065, there's just a ton of stuff here that could hold them down, and they could blow right through that and go to 2090, go above these old highs here. I just like to caution this. This looks awfully good. This is a lot of strength for 2 days here. It looks awfully good. It looks like they could go much, much higher. Very true. That's very possible. The only thing is, when you get major volatility like we're seeing here, that really is much more indicative of a high forming than it is a low. It doesn't mean they can't go up from here. Just, again, from a probability standpoint, this is the way the market makes a high. So, you just got to be cautious that even if they do go higher, they don't turn down very quickly from one of those areas. And they could go to new highs and then turn down. So that's a worthwhile trade anyway. So that's what we've got for you today. I hope you can find something profitable to get yourself involved with. Thanks for checking in to see how we're looking at things.